Hey guys, what's going on? Coming at you with a Thursday morning video. So I just wanted to basically summarize what happened in the market yesterday and just go over basically some key points, what to look forward to, how I think Q4 is going to go because it just kicked off a couple days ago, and kind of go from there. So if you haven't watched my previous videos, I am a long-term investor. I believe that's the best way to gain wealth. I'm not a day trader or swing trader or anything like that. I'm kind of more like the Charlie Munger, Warren Buffett style investor, where I really feel like, that's the best way to gain wealth long term, and it's the most kind of in a weird way, it's a safe way. And really, the goal is to beat the S&P 500, which is like the index funds and mutual funds and all that stuff. So, strong Q4 rally. That's what I'm going to title this video as. So OPEC Plus spoke yesterday in the morning. They basically said they're going to reduce the amount of volume that they're going to be putting out. So the headline is 2 million barrels per day, but really, in reality, they weren't at full capacity. So there's a lot of misconception there. So basically, they're actually only reducing it 700 to 900K. So without getting into political stuff, depending on what network you're watching or who's speaking, politicalness aside, they weren't fully in full scale demand. So that number is very skewed. It's really more like 1 million reduction. But in reality, with an economic global slowdown, they're kind of just going at speed of where they think that the global economy is going. So I don't really think it's as bad as people think. And if you actually watched the market yesterday, it had a sharp sell-off, and then throughout like the afternoon, it kind of rallied back. I'm going to speak about that more towards the end of the video, but I think people had to digest what just happened, because if you look at the headlines without really looking into it, it looked bad, but it's really not that bad in my opinion. So my opinion, end of the year. So if you look at crude and just oil per barrel, obviously when the war started in February of 2022, oil shot up, and then I think it peaked around 120, 125. A lot of Wall Street said, oh, we're going to get over 150, 175 a barrel. That never happened. People were freaking out. Everyone jumped into oil stocks and commodities when, after the war happened, when oil was at 110, 120 a barrel, Wall Street on, a lot of networks were saying, oh, buy, it's going to 150, 175 for sure. Never happened. So anyways, oil's gone down substantially. Obviously, as inflation, as the Fed raises rates, it squeezes people's pockets. And then that way demand falls. Less demand, the price lowers, basically, supply and demand. So end of the year, I think we're going to be 80, 90. We've been sitting recently, the past like 4-6 weeks, been sitting around like that 75 to 95 range. So it's going to be basically right in line. It might spike up short term for the next couple of weeks, but then really fall back down. So not too concerned about that. So really, like I said, gas is going to be around the same, obviously, because the mid-election's coming. They want gas to come down to retain the party in power right now. And then the other party is going to say, oh, gas is out of control and it's going to stay high. So it's really a political play. And I think that's why the media is making such a big deal. That's why it depends on where you're watching, and it matters. So anyways, expect to pay whatever you're paying right now, basically for gas and stuff like that. That's probably what you're going to be paying for the foreseeable future, for a little bit at least. Fed. So basically we have to remember the Fed is focused on core inflation. So this is a commodity. This is not in core inflation. Energy is out of core inflation. So really when the Fed says they're going to adjust rates and hike and they want to get to 4.5 basis, which is over neutral, they're not even factoring in all this headline OPEC plus stuff that happened today. That really doesn't have any focus to what the Fed's doing. They want the core inflation number down. They want to see it go down. So this really is actually no relevance. That's just the headline CPI, which does matter too. But really the Fed is focusing on core, to my knowledge, per Jerome Powell. So small caps. Small caps mainly, almost every single one of my small caps that I own, they hit their 52-week lows or bottoms in July 16th or July 17th. So we did hit new lows in large caps and some mid caps in the last week of September. The market really capitulated, like the really big guys fell. But the small caps kind of held their own, and they got close to their lows, but they didn't really hit new lows. I know Cathie Wood spoke yesterday, and a lot of her stocks are very SPAC-y, or small caps, or very innovation driven stocks. And she even said her portfolio didn't hit new all-time lows last month. So that basically means they're running out of sellers. And I think people feel a lot better now that, you know, the market likes forecasting out 3 to 6 months in advance. They didn't feel comfortable really saying, oh, the bottom's in June, because that would be January, 6 months out. So now if you reset that, we hit new lows in September, October, November, December, January, so that's February. So that kind of gives you, like, we'll have a way better idea. We'll get through Q3 earnings, which are coming up. We'll be getting into Q4, so we'll have a lot more CPI reports. We'll really see where inflation is, and then we're gonna get 2 more earnings cycles in 6 months. So I kind of see why people feel better about putting money in now. Jobs are Friday, so kind of good is bad, and like there's not really a good situation because, you know, the Fed wants to see tightening. They want to see the economy slow down to get inflation down. So basically, the lower, if we miss on jobs, that's going to be a bullish sign to the market. If we beat in jobs, which in a normal market's good, that means your economy is really strong. That'd be bad in the market in this case. So we're kind of hoping jobs come in a little light than what analysts think. That would be a bullish thing for the market. Regardless if they're good or bad, you know, if the market goes to new lows, I'll buy. If it rallies based on less jobs than what they thought or coming as even, the market will probably rally. I don't play, you know, I won't trade on things like that. A lot of people do, but I think it's really a gamble because who really knows, you know? Some companies are doing great. Some companies are laying people off. You know, we don't really know. The job ratio is still 2 to 1, so it's still employees market. So keep that in mind. Let me see where I'm at here. Okay, yeah, so market closed, as I talked about above here, up above. The market did actually rally in the back half of the day. So it basically went back to neutral. So we had 2 amazing days, Monday and Tuesday, where we had, you know, the Dow and S&P, they were up 2-3% each day. My portfolio between those 2 days moved like 8 or 9%, which is crazy. The market took it, you know, between this news. It was all bad basically today. There wasn't any good news. So the market came off that bottom, rallied, held, went off that news, let it digest, and it came right back up. So that means basically in my eyes, the market really took that sell-off, in my opinion. So that's good if you're a long-term investor. That kind of gives you faith. Maybe a bottom's in, you can kind of work your way up. I'm not going to stop buying on the way up, but I'm just being very cautious with my money because I went really crazy in September with buying positions. So yeah, my plan, I'm just going to be very cautious. I'm going to be very careful on what I'm going to buy. I did in a couple videos back, did basically share what stocks I'm buying and why this month and why I like them. If you haven't watched that video, you might want to check it out, but just cliff notes. One was Meta, love Meta. It's still really beaten down. Shopify, that's a ticker. That one I love too. What else do I really like right now? Those are really the 2 I've been really focusing on a lot. Palantir is another one. So these are really my core 3 I've been really focusing on. I do hold about 17 stocks right now, but these are the 3 I really want to build out and make much bigger. These are all top 5 or 6 positions of mine. So I just want to make these guys really big, just like my top 3 core holdings right now. So so that's my plan. I'm just going to kind of, you know, if the market keeps going up, I'm going to kind of hang low because there's still a lot that can happen in the next couple of weeks between earnings, jobs, Fed meeting. You know, there's so much stuff that can happen. And basically as a long-term investor, how I look at it as most of my positions are very big already. I've been buying all year like crazy, essentially, really a year and a half. So if it goes up, great. If it doesn't, I will buy more. So I really can't lose as a long-term investor if you have like a 3 to 5 year outlook. So it's kind of my opinion on the market. We'll see what happens tomorrow. We'll obviously see what happens with Jobs Friday. So I'll make a video tomorrow if I buy anything, unless the market really sells off. Doubtful I will. But yeah, any other news that comes out or anything like that, I'll just try to dumb it down and summarize it for you guys. But that's really what happened yesterday in the market. So trying to get to 1,000 subs by the end of this month. If you guys hit the subscribe button up there or down there, it's much appreciated. Till tomorrow, peace.